Hey everyone! In today's video, I'm excited to share one of the best indicators for scalping on TradingView, the Heikin-Ashi RSI oscillator. This amazing tool can help you eliminate the range in the market and spot when a security is overbought or oversold. This info is super useful for retail traders looking to get better trade entries and make more money. However, many traders don't know how to use the Heikin-Ashi RSI correctly, which can lead to frustration and blown accounts. So today I'm going to share my best Heikin-Ashi RSI strategy for trading. This strategy will help you make massive profits daily. I'll also share the results of backtest this strategy 100 times so you can see its real win ratio. Now let's dive into the setup. We're currently looking at the price of the euro against US dollar on a 3-minute time frame. I highly recommend using this strategy on lower time frames like 1 minute, 5 minutes, or 15 minutes. To set up, click on the indicators option and type in Harsi. Select this one by J. Rogers, double click on it, and in the input section, change the length from 14 to 10 and the open smoothing from 1 to 5. Head over to the style section and hide some options just like I'm doing right now. These changes make the indicator smoother and easier to read. Next, add an exponential moving average with the length of 200. And color it white. Then add the high, lower, low strategy. Uncheck everything except for higher high and lower low. The setup is ready. Now let's understand the logic behind it. The number one goal is to identify the trend direction first using the EMA. If the price action is below the EMA, the market is in a downtrend and will only take short positions. If the price action is above the EMA, the market is in an uptrend and will only look to buy. In a downtrend, wait for the Heikin-Ashi RSI to get overbought without making new higher highs. A signal to go short is valid if the price is below the EMA, the Heikin-Ashi RSI gets overbought, forms a red candlestick, and the recent label on the high, lower, low indicator is lower low. If the price makes a new higher high before the Heikin-Ashi prints a red bar, the signal is invalid. A bearish candlestick must form when the Heikin-Ashi turns red. Set the stop loss at the recent swing high. For take profit, move the stop loss to break even at a 1-to-1 risk-reward ratio and set it at 1-to-1 if the price reaches a 2-to-1 risk-reward ratio. Here's an example for a short trade. The market is in a downtrend. The Heikin-Ashi RSI touched the red zone and formed a red candlestick, and the market didn't make a higher high. The current candlestick is bearish. And the trade reached our second target, making a good profit. For long trades, the rules are the opposite. The price must be above the EMA, the Heikin-Ashi RSI must get oversold, form a green candlestick, and the recent label on the high, lower, low indicator must be higher high. If the market makes a new lower low before the Heikin-Ashi RSI issues a signal, the signal is invalid. A bullish candlestick must form when the Heikin-Ashi turns green. Set the stop loss at the recent swing low and manage to take profit the same way as with short trades. One downside of this strategy is that you won't get many trade entries because the price action often makes lower lows and higher highs when the Heikin-Ashi gets overbought or oversold. But don't worry, I'll show you how to increase the number of trade entries at the end of this video. Now let's see the backtest results of the strategy to see how well it works in different market conditions. The win rate is 84%, and with smart money management, we increased the account size by over 1,600%. Keep in mind that live trading results may vary due to spreads and fees. We had 8 consecutive wins against 2 consecutive losses, and these results were achieved in 106 days. To increase the number of signals, remove the high, lower, low strategy, and add a simple volume indicator. Enable the moving average and set its length to 30. For long trades, the price must be above the EMA, the Heikin-Ashi RSI must get oversold, form a strong green candlestick without a lower wick, and the volume must be green and above the EMA. For short trades, the price must be below the EMA, the Heikin-Ashi RSI must get overbought. Form a strong red candle without an upper wick. And the volume must be red and above the EMA. This way you'll get more trade entries without sacrificing quality. Let me know in the comments if you want me to backtest this strategy as well. Thanks for watching, and happy trading.